professionals to give you a real look at the day-to-day, what kind of skills, their career path, what kind of job functions you can expect as you consider your next moves. So I'm thrilled to introduce Rebecca and Rob. Rebecca and I share the same mentor, who's awesome, and so I've got to know Rebecca that way. And Rob and I work together at Securian, so I think, and he taught me everything I know about manager due diligence, so I think he's going to be an excellent resource for you. Please feel free to ask questions. I know they want this to be conversational. And other than that, I'll turn it over to you guys. Thank you. Sure.
All right, well, as Kate said, I'm Rebecca Kamsin. This is Robert McBee, goes by Rob, if you want to be a little more casual about it. Today we're going to spend some time talking about what our roles look like as Manager Due Diligence Analysts. You'll talk about the agenda.
Sure, and thank you all for coming. We'll go through the agenda here, and as Kate said, please be interactive with us. We want to make sure we get all your questions answered, and it's been a great career for me, really interested in this field, so we want to make sure we're sharing all the information we can with you. We'll go into our introductions a little bit, tell you a little bit more about ourselves, our background, career path. Then we'll get a little more specific into our current roles with our firm and the teams we work with. And then more specific on the job, duties and responsibilities that we encounter. Some cases are going to be different, so it'll be hopefully an interesting perspective for you. Opportunities and challenges we get on the job, and the skill set needed to do it. And then any questions we don't answer along the way, we'll have a Q&A session at the end.
So to start with, we'll give you guys a better idea of who we are and how we got to the roles that we're in. So I went to school at Bethel University in St. Paul. I originally wanted to be in marketing, but I also added some finance in there because I thought that would give me a little more meat to kind of my marketing focus. But over time, I was really enjoying the finance classes a lot more, and I decided that that's something that I wanted to pursue when I got out of school. I graduated in 2008. As you might recall, that was a very tough time to be entering financial markets, trying to get a job with no experience. So it set back a little bit of what I could expect, the type of responsibilities that I might have originally outside of school. So what I did was I looked for a role that could at least get me at a financial firm, maybe building some of those relationships so that I could put myself in a position to get where I wanted to go. So I started at RBC Wealth Management. I was in operations there. I was processing reorganizations, and there were a lot during the financial crisis, so a lot to do during that period. After that, I was able to get even closer to what I wanted. I went over to a firm called Slocum. They were recently purchased by Pavilion. And I was doing investment analysis there, which meant it was very client-facing. There was performance reporting, asset allocation, client relationship management, kind of a hub position where you're pulling in all these different parts of the firm to get what the institutional clients need. And from there, I was able to finally get where I had been trying to get, which was manager due diligence. So I went over to that firm's hedge fund team. So I was working on direct hedge funds, did that for a couple of years, came back to RBC Wealth Management to join similar type of team, but focusing on fixed income mutual funds as the main thing that I'm looking at on a day-to-day basis. As far as outside of work, I'm involved with the CFA Society of Minnesota, go to some of these type of things. Also, if you haven't looked at or participated in the mentorship program, there's an informal and formal, and I would highly recommend. Those have been really good experiences for me. Also, Minds Matter of Twin Cities is another thing I'm quite involved in. It's a nonprofit in the Twin Cities that focuses on setting up mentors with lower income but high achieving high school students and making sure that they know all the options available to them so they can kind of make the most of which college they get into, what type of scholarships they get, ACT scores. It's a really comprehensive program and really cool. So if afterward anyone wants to talk about that, I'd be happy to talk more.
Thanks, Rebecca. And then, I thought I was trying to think of something that might get your attention, something a little fun so you remember me anyway, but any of you get involved with the NFL experience when the Super Bowl was in town here recently? Okay. Well, I had the privilege of going to the Taste of Minnesota in St. Paul, and one of the highlights for me was I met a Hall of Famer named Jack Youngblood. So I came to Jack and introduced myself. He said, "Oh my gosh, you were the spitting image of Mike Munchak. You're the same size and everything." Well, I know football history. Mike Munchak was an offensive lineman. Like, okay, maybe we got to think about that treadmill a little bit more. But, anyway, so that was my recent humbling experience. Education, MBA from that little school to the south, so we'll move beyond that quickly. BA from Concordia in St. Paul, and then CFA charter holder also. So highly encourage you. The combination of the college education with the CFA program has really been a rewarding thing and a good thing for my career. Work history, you may have seen the Securian sign, Williams Arena maybe, or out at the Bank football stadium, TCF Stadium. Longtime partner of the University of Minnesota, so very happy to be here. Other things I've done, in that Securian I've done due diligence for the last 10 years or so. I cut it off here about 12 years. I've been in corporate environments for about 26, so been around a little while. National American University was a adjunct instructor. United Health Group, I did capital budgeting. And then Hutchinson Technology, I was on their 401k committee there. In addition to managing some of their short-term investments, about, I would say around $250 million. And you can see some of my volunteer work there also. Best Prep, working with high school students. CFA Society, I do some work there. Habitat for Humanity, you familiar with Habitat? I've done that a couple times. And then I threw in Watertown football. I've got a competitive athlete that's a sophomore in high school, so my job gives me that flexibility where I can coach here and there too. So I've done quite a bit of that in the past, baseball, football, that kind of thing.
And then talk about a little bit what our firms look like. We have a similar role, but what that looks like is a little different, and the firms we work for look quite a bit different as well. So I'm at RBC Wealth Management. A lot of people haven't heard of it, or if they have, they think it's just Canada and that's it, so Royal Bank of Canada. But it's actually one of the top 10 biggest banks in the U.S. They just have a really low profile. About $279 billion in the U.S. Outside the U.S., it's roughly $600 or $700 billion, but I'm just going to focus on internally in the U.S. Approximately 1,800 financial advisors, so that is the model, is individual financial advisors. They have their client base, and then we have what we call our home office, and we support everything that they need to run their business. So for my group, we're supporting their investment choices. Client type that they might have, high net worth, ultra high net worth individuals, could be families, institutional accounts, or retirement. My team for due diligence, I would say, is a mid-sized team. We have about 14 analysts, about 21 total people. We're across Minneapolis, London, and Toronto. We have a couple more smattered around, but those are the main places where we have analysts. And we're looking across equity, fixed income alternatives, and pretty much any investment type, mutual funds, separately managed accounts, hedge funds, private equity, kind of across the gamut.
Securian, give you a little background there, largest private employer in St. Paul, so very large insurance company, although in scale in terms of comparisons to RBC, much smaller firm if you compare those two. So that's where part of the differences you'll hear about between Rebecca and my job, we'll be able to distinguish that a little bit, but still not small by any means, 70 billion assets under management. My team supports our individual annuity, individual life, and retirement businesses. And we deal with thousands of advisors across the U.S. In addition to another difference, I think part of my job is I go out and visit with our largest retirement plan clients. So you're all familiar with 401k plans. Our largest clients, that way I go see really across the United States and get them investment reviews. Our team, 4 people, 2 managers. We all act as generalists covering all asset classes. So again, we meet with clients. We have to really understand all of these investments we work with. Kind of a nice career path for me. It's not just limited to due diligence. I've taken on management of a couple of people, so there's chance for that growth too if you get into this field.
I should mention, I don't know if I did, but I'm covering just mutual fund, fixed income mutual funds. So generalist team over here, we get a little more specific where we can. So that'll drive some of the differences as well in how our roles look different. So these are the duties and responsibilities in the role. Of course, there's probably more than these, but these are the main ones we thought of. The first two, quantitative and qualitative manager research, that's really the core of the role. Everything else after that is either informing the due diligence that we're doing or making the diligence actually useful, so getting it out to clients, all those sort of things. Quantitative manager research, that is going to be looking largely at performance data of strategies. That could be using FactSet, Morningstar Direct, Style Advisor, Bloomberg, any of those type of performance platforms that you could use, and figuring out not just how do the trailing returns look, but you're really trying to build a comprehensive picture of what type of manager this is. You're looking at how volatile they are, the Sharpe ratios, the information ratios, upside downside captures, correlation to the benchmark, correlation to other peers in the space. So you're looking at a lot of different items, not just return, to try to figure out how this strategy might look in the future, what kind of its pros and strengths and weaknesses have been in the past, and really understanding how it works even before you've actually spoken with anyone at the firm to figure out, if the picture you've drawn actually lines completely up with what you thought. But that quantitative part can be both for an initial search, so sometimes someone might come to you and say, this is a particular mandate we need to fill, and then you go out and you find the manager you think is best for what they need. Alternatively, you could just go out on your own and just find what you think is the most exciting manager for any given reason, or we often call them high conviction managers. The next thing is qualitative manager research, and I would say this is at least as important as quantitative, probably more so. The majority of this is going to take place through conversations with portfolio managers and analysts of the different strategies that you're looking at. There are other ways that you would get information, reading news stories, talking to other people who might have insight on the firm, but really the conversations are going to drive your understanding of the strategies. And that can be really figuring out across a number of things. So from the firm standpoint, you want to understand how it's set up. Is it stable? Is it a healthy company? From the investment professionals, how do they work together? What's their experience? What's their expertise? What's the culture there? From the investment philosophy, do they have an edge? Does it make sense what they're trying to do or exploit in the markets? For investment process, do they have a really clear process that they're following, and is it consistent? Are they actually doing what they say? And then performance, I like to have conversations with them off the front end about how they define success. So some managers might be looking for a certain level of income or a certain level of downside protection, or they just might be total return. And that can help give you a framework of things to focus on when you're trying to figure out if they're actually doing what they said they would do. Do you have anything you want to add on?
Just I kind of look at this, we really think we add most of our value on the qualitative research side at Securian, where we do a lot of work with the numbers. Quantitatively, we risk adjust returns and try to assess performance, but really you could be looking at performance of a fund, mutual fund, looks great. Wow, across the board beating the benchmark. That can all be irrelevant if the portfolio management team is left or you've had significant changes to that team. So that's part of our qualitative assessment, where the numbers don't always give you the same true picture.
Absolutely. Next would be economic and asset class research. So that's really trying to get a good idea of all the macroeconomic forces that could be working on the investments you're recommending or might recommend. Asset class, making sure you understand how those work, the dynamics within each asset class, both just from understanding kind of those static things of how they work, as well as on an ongoing basis. There's always these small things that are impacting what each asset class is up to. For me, this involves a lot of reading, I'm sure for you as well. I try to spend 30 minutes to an hour at the beginning of every day just reading pieces that I think are most relevant or most interesting to me. It can definitely be more than that in any given day, but that would kind of be a minimum. And the stuff that you're reading are white papers that come from managers that you follow or managers who share that more widely. It could be internal research. We have a strategist desk that I make sure to keep up on what they're thinking. It could be news stories. And then certainly at quarter end, making sure that you're reading through all of the updates and commentaries from any of the strategies that you're actually actively recommending, to make sure you know how they're positioning, what they're thinking about. So quite a bit of reading there. For portfolio management, this is something that not every due diligence analyst might partake in, but I think it's becoming more and more common. This would be typically a discretionary pool of assets at a firm where either it's for a single client and the firm gets to make the decisions of what happens to the money, or it can be a big commingled portfolio where financial advisors or clients can choose to put their money in that portfolio and then the firm actually manages it for them. So it's often set up as portfolios with different mandates. So maybe they have an income focus or a total return focus or tactical allocation shifts, and then risk profiles within that. So the client or advisor can pick the one that makes the most sense for them. As far as from a due diligence standpoint, often there might be a kind of a top investment committee and they're actually doing the management, but they reach out to the due diligence analyst to tell them what type of fund they're looking for or ask the analyst what they're seeing, and then the analyst will make the recommendation. It's also possible to actually be part of that committee making the decisions, not just for what funds, but what combinations, the sizing, looking at all the different risk measures to try to figure out if you need to tweak things or if you're actually providing the risk return profile that you told advisors that you would give them.
Really, that's an area where Rebecca's team does something different than what we do at Securian, where we create investment arrays, and I'll talk a little bit more about that later, where we're choosing, say 150 investment options we cover on our retirement platform. We've got another 80 to 90 on our annuity and life platforms, but really we're just choosing funds from a variety of categories. We don't go down to the level of portfolio management your team does.
And I should mention too, up with the quantitative and qualitative manager research, typically what your aim is to come up with a list of mutual funds or strategies, hedge funds, whatever, that are what you would recommend either broadly to kind of anyone who would come in the door, or it could be a very specific recommendation for a client. So all of that manager research is going into finding your best ideas and then also staying on top of whatever you're currently recommending. As far as thought leadership, so this can also be kind of a wide array of things. At a minimum, an analyst is going to need to be able to express their views to their teammates, to their supervisor, to their clients, their advisors about which funds they like and why. So that can just be a very basic level. Often that's written, but a lot of times it's verbal as well. It could also be putting together educational documents, so white papers, 2 to 10-page research papers that might be internal, or they could be something that the firm might make more widely available. And that could be on anything from things that are going on in an asset class, a way that you think about portfolio management, really anything that's kind of pertinent to the audience you're writing to at that time. It could also be verbally, so if it's a firm-wide call where you're talking about maybe an update for a manager, or again, something in the asset class space that you're looking at to keep them up to date. But a lot of just making sure that you are the asset class expert, and so that information gets to everyone it needs to. And often that's, either through writing something that gets to everybody or sharing in a more public way what you're up to and what your thoughts are.
Yeah, I would say thought leadership is one of the most important things on here in terms of at least what I've been asked to do in my role. I've been told, where you're going to really add value for us is we want your strategic insight. We want, it's great you do good things day to day, but we need you to provide some strategic insight on where these businesses are going in the future. So very, very key part of what we do. I'll jump into the next one. I think this is a little bit different from what Rebecca does too, but I'd mentioned I travel quite a bit talking to our large 401k clients. So we pick the investment options that their plans ultimately select from. So we have about 150 at Securian, which we take a fiduciary role on. We're taking a legal responsibility on those 150 options. I go out and clients will work with financial advisors to select approximately 20, usually it's around 15 to 20 investment options for their specific 401k plans. So what I do is I go out to these large clients and I go and give them investment reviews on those 15 to 20 investment options and answer questions. So in general, who I'm meeting with, the audience is, this is part of the excitement of the job too. I'm meeting with CEOs, CIOs, human resources managers, really high-level people within their companies. So you really have to come prepared to talk to some people that are very intelligent and really have a good in-depth understanding of what this investment business is all about.
Yeah, and I would say that I think that's probably the size thing. So at my prior firm was smaller. We had, let's say, 100 institutional clients, and so that was more where we would do similar investment reviews, talking to their boards, and being just the investment team would be kind of face-to-face with the financial board of that firm, whereas where the role I'm at now, that would typically be taken on by the financial advisor. They're kind of the in-between relationship manager, explaining exactly what makes sense for each of the clients rather than us. We might do it on occasion, but it's not a core part of what my team is up to.
And I would say, on the other product lines, I'm speaking more to the retirement side of our business. With our annuity and life sides, I'm primarily speaking with our advisors there, and I don't get into near the level of discussion I do with our retirement clients. But that's, again, it can be on the retirement side, these executives with these companies, as well as a financial advisor representing that firm. So we tend to treat them both as clients. Jump to the next one, product research. This is another thing I do quite a bit of work on at Securian, part of our product research committee, and it's an example of one of the products I'm leading. Have you all heard of target date funds? Investments that basically distribute assets depending on your retirement date. They'll get more conservative into fixed income the older you get and closer to retirement. We have a proprietary target age product that's, rather than built on a retirement date, it's built off your age. So it's a product I'm looking at. We're looking at changing glide paths, potentially changing allocations to asset classes. So that's something where me and my team have had to go out and do some research to figure out what's going to be a competitive product in the marketplace where we think we have a key advantage. Our target age product tends to be accepted. I want to say of our new retirement plan participants that we get in, over 80% select our target age product over target date product. So it's very key competitive advantage type of product for security.
Yeah, and I would say our team doesn't really do much of that at all. Sometimes, I would say probably the majority of that would be done by our product group, but we wouldn't think of products in exactly the same way. It would be more the type of platform we would put together, which is kind of a whole other can of worms that we just don't do a lot with. So yeah, different in that respect.
We'll go down to investment commentaries. So I did want to highlight this one. The class you take in college, and we can get into that a little bit more on what we think are some good classes to take that'll benefit you. But you want to have strong writing skills. We produce quarterly commentary. We also do an annual report where our whole team has to write about the investments. And I wouldn't say that's the strongest area of our team in general, but wanted to make you aware of that. You're going to need strong writing skills for this position also.
Definitely agree. I think I was sort of lucky to be at a firm, pretty early in my career that was maniacal about how we wrote and, that the grammar be perfect and all these different things. And I've carried that with me, and it's made my life now so much easier, so much quicker when you have so much to write. The faster you can get through it, and the fewer edits it needs, the better.
We do have kind of a collaborative environment when we're writing it too, where we get down kind of really at the very detailed level, and there's been spirited discussions where the Oxford English Dictionary has been brought into the discussions and whatnot. But anyway, it's something we do take seriously. Mentioned a little earlier financial advisor interaction. So again, this is one of our key clients across our product line. So very important that we maintain those relationships. They bring Securian business, so we treat them as a very valued customer. But not a lot more to say than that. Investment data requests. So part of my job, and the fund selection is a lot of fun. I enjoy that part. We do get investment data requests from our clients and advisors, which can be a little more tedious. And things like, if there's I'll give the latest example, Bitcoin. You may have read the headlines about Bitcoin. Rob, where can we get Bitcoin exposure? Well, that's not really appropriate for the types of investments we offer, but We do get some that though get into more detailed research though, so it has to be, again, you want to provide good client service, so we tend to be very quick and get those requests back to whoever is needing the information very quickly, but it can be a strain on us too.
Yeah, I would say I'm fairly lucky that we have a team dedicated to financial advisor interaction, so they take probably 80% or more of the incoming questions from advisors. That team also kind of sits with us and knows the meetings we're at and all of our views, so they have really broad knowledge. But if there is something where the advisor needs more information or they just need more backup for whatever reason, we'll come into that. So I would say that isn't a huge part of what I do, but it does come up sometimes.
And then the last one is one of my favorite ones too, fee negotiation. Investments very sensitive business around fees right now. A lot of legal cases centered around fees and excessive fees. What I'm doing is generally interacting with fund companies to try to get the lowest possible cost for a company, depending on the investment structure. So that for me is a lot of fun. Some of you may cringe a little bit about, negotiations aren't always for everybody, but it's something I enjoy. It helps to keep us competitive. I would highly, if you have the opportunity to take a negotiation class in college, that was one of the classes I benefited greatly from. So, have any of you taken a negotiation class just by curiosity?
I'm not in it this semester.
It's, what I learned right away, you think at first you want to try to win in a negotiation. And really, once you get into class, they teach you, well, create a win-win environment so both sides win. That way they're going to want to do more business with you in the future, et cetera. So it's kind of something I took away that, that's really, if you're trying to build a relationship, you want both sides to benefit. But something I enjoy. Again, you may want to look at a class if that's of interest to you.
And I don't do fee negotiation, now our product team, so thankfully they just tell us when a fee's gone down and we get to deliver the good news. So they do the work, we take the credit.
When you guys talk about fee negotiation, is that something different than the stated expense on the mutual fund? Like if we look at the 401k fund in our 401k program, we have a fund there and it shows an expense ratio. Is that something you guys are negotiating, or what other kind of, what fees exactly are you negotiating?
Yeah, good question, Kate. Depends on the investment structure. They're, like for our annuity and life products, I negotiate those fees and there's some flexibility there. We use a trading platform called Broadridge Matrix, which is more, those fees are more set in stone. We're getting the lowest fees and it's published, so they've already done that work for us essentially. It's basically a broad trading platform used by many clients. But I do more work on, and I'm going to get into the weeds a little bit, but sub-advised investment options also. They're basically unique contracts with a fund company to our company rather than a retail mutual fund. There's more flexibility in those negotiations. So depending on the investment vehicle, you can get heavily involved in that. But yeah, if you're looking at a stated expense number, depending on the product line, it could be or may not be that actual.
So you guys can offer something different than a standard mutual fund.
Right.
So on this slide, we're going to talk about opportunities and challenges that we have in this role. Tried to kind of pair them off together. Some of them are more related than others, but kind of the good part of the role mixed with the similar bad part of the role. So to start with, meet with smart, interesting people. It is really cool meeting with people that you see on CNBC and Bloomberg and getting to pick their brain directly. Even if they aren't in the media all the time, really smart analysts, macroeconomists, just people who are really in the weeds on all these different financial things, and those are just really fun conversations to have and to have access to those people. On the flip side, you do have a lot of demands on your time from relationship managers. So as a due diligence analyst, the fund company has to have you like them before they can get either access at all or broader access to the money at your firm. And so because of that, you can be inundated with requests for meetings from client relationship managers trying to get their products in front of you. Anytime a portfolio manager comes through or an analyst or anything like that, do you have an hour? Can you make this happen? And a lot of them are really cool meetings, but you can't fit them all in. So trying to figure out which ones make the most sense to actually take. And then even if you're not interested at all, it takes time to respond to all the emails saying not interested and here's a quick reason why. So just a lot of time management, saying no, and having to miss out on maybe some things you wish you could do, but you just don't have the time for.
I agree completely with that. The number of requests we get for our time, at some point, you just have to cut it off and determine is this going to be of value to us or not. And we tend to be Minnesota nice, want to take out every meeting we can, but at some point you do have to cut it off. I would agree also, the number of these people we're meeting with, the fund company representatives, very intelligent, and that's part of where I get my strategic insight also is what else is going on outside of my company. The flip side of that, I would say that the bulk of the relationship managers we deal with from fund companies, very polished speakers, very, very strong interpersonal skills. Rebecca and I had talked a little bit about this. I actually like meeting with the portfolio managers better, people who actually manage the money, where they're not so polished in many cases. You're going to get unfiltered comments. And to me, there's a lot of value in that. Part of our qualitative research, where the example I gave to Rebecca, one fund company we talked with had shared information about a terminated employee that probably legally they shouldn't have been sharing. Some information that probably should have been kept private. But that to me is a concern, because I don't want to be using portfolio managers that are going to get themselves in legal trouble. So,
yeah. You get to read about fascinating topics. So all this information that comes in, assuming you're interested in finance, these would be fascinating topics. All of the different research, all of the really cool white papers that come from all these different places. Just a lot of good content that you get to read about. On the flip side, information overload. So on any given day, I get a dozen or 24 really good articles that come directly to me from either companies I know or just ones that put out a lot of good information. I can't read them all, so I have to pick which ones make sense to actually read or not. Kind of sucks when I see something and I'm like, oh, I'd really like to know more about that, but I honestly just can't. And then when it comes to quarterly reporting that comes out from all the strategies you manage, I cover about 60 strategies right now. I've covered more in the past and less in the past. Either way, it's just a lot of reading, because you need to read everything that comes out that they're sharing on those strategies, so that can get to be quite onerous as well.
I would agree completely. I would say I'm reading on average over 100 emails a day, or getting 100 emails in, and that's not including phone calls and response time to these things, and people stopping by my office asking for information and or discussing different things. So it's really, we get a lot of demands on our times in terms of the amount of information we have to get in. We really have to kind of be selective with, again, what's important, and do I want to be reading about the Bitcoin article here? That's fun to know, but probably not critical to my job.
Yeah, I have a 10-page article sitting on my desk that I'm like, I'll get to this, but it's never the most important thing to do in any given day. Using intuition during due diligence meetings. So this to me is one of the most fun aspects of my job. So when you're meeting with a portfolio manager and the analysts, their job is to tell you the facts about their strategy and then try to sell you on it. So they're going to point out all their strengths, all of the amazing people, their process, all that stuff. They're very rarely going to come out and say, these are our areas of weakness, these are kind of the risks that could be inherent to this strategy. And no strategy is perfect, so this isn't just for bad strategies, this can be good as well. And your job is to read between the lines, ask the right questions, get the right people in the room together, or separate certain people, and you can get kind of strategic about how to get a little more information or understand a little bit better the things that the team might not just come out and say. For me, a huge part of that has just been really good note-taking. So even if I haven't talked directly to that team in a year, I can look back at really detailed notes, ask them a question, that maybe was an area of concern before, and they'll be kind of surprised that I remembered that at all, but that can get you good information. On the flip side, not every meeting is fun. There are difficult managers out there. I would say as far as, outright rude managers, those are out there too, but very much the minority. I think more often what you run into are one of two types, either the type who just isn't a very good communicator. So you ask a question and they don't know how to answer it, they don't know what you mean, they need the question asked this very specific way, just really not very good interpersonal skills. They're probably decent or even very good at managing a portfolio, but you have to be able to get that comfort from them and actually having them articulate how they're doing that to you. The other one are the managers who are more like the client relationship people, who cannot be real for 1 minute, and everything they say is just, they won't even acknowledge there's a problem when, like, I'll read them the news story with a quote from their CEO, and they'll be like, we haven't heard anything about that. And I'll be like, it's literally in this article. So those can be a little frustrating as well. So most meetings are enjoyable, but sometimes they're frustrating, and you just walk out saying that was kind of a waste of time. But again, not the majority of meetings.
Yeah, I would say, as far as the due diligence meetings you have, what you're basically doing in these meetings is they'll bring in a strategy that may be of interest to your firm or not. So they may come in and say, Rob, I'd like to review our large growth strategy with you. I brought in my portfolio manager. And so what you really got to do is they're going through their presentation to determine what makes sense here and is there something that doesn't. I shouldn't say a lot of times. There are times when we'll catch managers giving incorrect information or basically saying things that aren't accurate, which for us that's exclusion from consideration. The one example I can think of, had a fund company come in presenting their investment strategy, and they were talking about how they had a valuation focus. And so I was looking at their investment characteristics page, they call it, looking at price to earnings ratios and things like that. Their ratios were notably higher than their benchmarks. Well, you just told me you're valuation focused, but your valuation measures are higher than your benchmark. That's a concern for me. You just gave me a conflicting message. So, example there, I think Rebecca hit on it well. Most of the people we meet with are very good. Again, as far as the managers, I like to get in front of a portfolio manager, talk with them, and get some of those off-the-cuff comments too. Not all of them are pleasant, and what you have to remember is they're trying to get business from you. You're the client in this situation, so they may try to dominate the conversation. Part of that is you've got to be willing to take control of those situations too. We get some head scratchers. Every member of our team is required to have a CFA journal. So we're all got good background in the portfolio management context. Tried to educate us on basic concepts like data. And we were all kind of shell-shocked. At one point he asked us if we were paying attention. That was pretty much the answer. Final day on the call. Most of them are decent to work with though, but I would say that's something where we talked a little bit about. I've gotten more comfortable over time being able to shut down conversations, or if they are behaving rudely, making it more
Analyzing the that is done on the manager. This is also, I think, kind of a combination of a lot of fun where you have all of these discussions. You have portfolio managers with the analysts, you have news stories, you have all the performance data you've got requests for proposal they may have sent over. You might even have some SEC stuff to work with if there's been issues in the past with that. And you get to form kind of a cohesive narrative for each strategy, what you think its strengths are, its weaknesses, how it works, what market environments it might do best in, which ones you would expect it to underperform in. So it's really just building this really wide story around any given strategy. And specifically too, there's often a pretty set group of things that you're looking at for every strategy, but every strategy is also going to have something a little bit different where you think this could be a risk or this could be a strength. Haven't seen this before. What's a creative way I can look at it? Maybe a different data point. Maybe it's asking for additional information from the manager, and you get to think about each strategy in a little bit different way from any other one that you're looking at. There you go. On the flip side, there is so much information to keep in your head and keep tracked for both understanding the manager as well as for compliance reasons. It can be tough to log everything that needs to be logged and put every document exactly where it needs to be, and maybe some information you got was via email, so remembering to save that as well. Tracking not just your final decision, but the things that went into making that decision, so that when someone comes by a year later and say, why did we even do this, you can walk through a very specific investment thesis and things that you thought of when you put that together. So really keeping track of what you're up to and why can be challenging, but very important.
I say well, but I had similar thoughts there as well. Going down to the next one, helping clients meet their financial needs is something I find rewarding, where there's a problem with folks nearing retirement not really being ready for retirement yet financially. And so I feel part of what I can do is to help them get there by providing quality investments, working with the leaders of their companies to get these funds added to their platforms so that they have good choices, and hopefully that contributes to them preparing for retirement, say, or with our other products also, product lines. We want to make sure the investments are doing their part to provide for their futures also. On the flip side of that, delivering tough messages. There may be unrealistic expectations in some cases. The example I would give, you're all familiar with defined benefit plans. Basically different from our 401k side of our business, but defined benefit plans, they have to make different assumptions as far as discount rates, and again, getting in the weeds a little bit here, but return expectations. And I had a client situation where they were invested half in equity, half in some conservative fixed income, and they had a return expectation that was clearly too high compared to what we were hearing in terms of projections. You're not going to get a 8-9% type return, whatever it was, if you're half invested in a fixed income product yielding 3%. So just to be able to talk them through that, I'd rather mention this now than deal with the problems later on when you don't meet your expectations. But and this could take, there's a variety of tough messages we have to give in addition to working with clients and advisors, fund companies. Again, there's times we have to terminate those relationships. Not always the most fun discussions you can have, but if there's sound reasons, generally you do what you have to do. That's kind of my approach. I don't know, Rebecca.
Not really. So my role right now, the financial advisor would really be the one to have a lot of those tough conversations. In my prior role, there were some times where we would have to talk with the board about that, and that could be tough. I can think of a couple times where it was endowments who actually had really cool things that they were trying to do, and we had to tell them, you have to figure out a way to keep doing what you're doing with less money, even when it's a really good thing they're up to, and yeah, not fun. But it has to be done together to attack the problem.
And I should know that we started having some conversations a couple of years saying, your return expectations are too high. And we know what the markets did last year. We were seeing investment options with 20-30% plus returns. Well, I just lost a lot of credibility. But anyway, I say that jokingly, long term, there was an issue there. Next item down, seek consultation or action, advice in action. We may differ a little here too in our roles. My firm is not, the section of my firm is not a registered investment advisor. With our fiduciary responsibilities, I'm limited to being able to give education or really being more informative from an educational or consultation standpoint rather than giving direct advice. So I'm coming in, giving information. They're making the decisions based on the information I give them. So with that said, a lot of the information I bring to them does get implemented, and that's a rewarding thing. Again, you feel like you're helping them out, not only from meeting their financial needs, but also in many cases avoiding any legal issues they can face. So that's another key thing where I get a lot of satisfaction out of my job.
Yeah.
Are you more on the advice side?
Yeah, so I can kind of do as hard of a recommendation as I want, but it would be typically to our financial advisors, so they're the ones with the fiduciary responsibility, not me per se, unless it's on the portfolios that we're actually managing. So that kind of frees me up too. That's not something that I really ever have to think about, is how I'm presenting a recommendation.
Build competitive products. Again, we're creating investment arrays for our clients to choose from that support our different retirement, annuity, and life insurance products. We've got a lot of other record-keeping firms Securian competes with that are providing their lineups too. So we want one that really is going to be better than our competitors. We tend to take an approach where we will use the best investment options we can get at reasonable prices. So it's kind of an all-star lineup is what we create for our products. So in that sense, we're building competitive investment products to support our product lines. And with the fee focus we place too in negotiations, we think that's an area of advantage for us too.
Yeah, it doesn't apply so much.
Not
no.
applicable. And again, that can extend to the product research, where building out that target age product further and making enhancements so we continue to have a competitive product there. Another area where found to be rewarding, developing talent. Again, I've been around for a while. Had the opportunity to mentor some very solid people, and that have gone on to do really good things. But and continue. Have a couple of gentlemen that report to me right now that it's been very good to see them grow from entry level to now being very good, where many times they know more than I do on the subject. So the challenge to that, personnel supervision, is another obstacle where you're dealing with people that have their own issues going on and may need time off for whatever reason or another, or may need some adjustments to their approach in some cases. So it's trying to mentor them in a positive way, but it's a challenge from a time perspective also. You're not only worrying about yourself, but you're worrying about other people also. And
I don't have management duties, so maybe at some point we can.
Rebecca's like a much younger sister to me, so. Travel, this is one we talk about too, which my job, I've had the opportunity to see a lot of places. I've been, I think, to every state but 9 in the U.S. So going to a lot of really interesting places, places that I wouldn't have seen if it weren't for my job. So New Orleans, I went to Santa Fe, New Mexico within the past couple of years. Went to Anchorage, Alaska last fall. So really get to see some interesting places. The flip side of travel is, after a while, it gets hard on you. It's not easy getting crammed into a seat next to two people probably equal in size to me, and flying for 3 or 4 hours. That's always fun. But, I more travel stories than I care to admit. But you never want to hear those words, "We're having mechanical problems, so your flight's delayed." First of all, you feel like getting off the plane at that point.
Yeah.
Anyway.
But agree, like some of the cities that I've gotten to see and I've gotten to go to just repeatedly, you get to know a number of cities really well from the U.S. I don't do a ton of international travel. I'm going to London next month, so I'm really excited for that. But just really fun cities, and you're there enough that you kind of get to know the character and whatever about them. It's a lot of fun. You don't get much time to sightsee. You're there to work. But at the same point, you usually get to go to a dinner somewhere, or if you're walking to your meetings, if it's nice weather, you might, catch the, Brooklyn Bridge or the whatever it is, that you can see in each city. So a lot of fun. It is exhausting, especially if you're a serial overpacker like I am. I think that makes it sometimes worse as well. But on the whole, a lot of fun. I would say for me, I travel probably 4 days a month, so it's not that much really. What about you?
I'm generally, we look at it more, we compare miles, so I want to say I've been close to 50,000 miles in the trips I've been taking. And that's not including driving and whatnot, but yeah, you come up with some fun stories. We compare horror stories, and just to share one fun one with you. I was in a hotel room, I believe it was in Memphis or Atlanta, I can't remember the spot exactly, but in a hotel room, middle of the night, 12 or 1 in the morning, and I'm hearing what sounds like rain in my room. So I get up, go over by the doorway. Fortunately, it was by the door. I'd stick my hand out, and sure enough, there's water coming in from the ceiling. So I go out to the front desk and getting water coming in my room. Oh yeah, the toilet overflowed from the room above you. So to make a midnight change or 1 a.m. change to another room, and anyway.
You're
you
probably
come across
really
different
fresh
things
the
like
next
that,
day
so.
too then. A little like that.
Yeah, we have all kinds of fun stories.
All right. Well, we can get through the next set pretty quickly, I think, to make sure that we have time for at least a couple questions. Things that, or skills that would be good, I guess some of these aren't exactly skills, but that would be really a good fit for this type of role. Intellectually curious, so as we mentioned, all the reading, all the learning, that's kind of one of my main things every day is just learn as much as I possibly can. Part of it, I mean, a lot of it is just because I really enjoy learning. Obviously, it's for the job as well, but you might get a little exhausted by that if it's not something that you typically enjoy doing. Thinking on both macro and micro levels. So a lot of people are big picture people, some people are detail oriented people. You really need to be both for this type of role. You're thinking about everything from, asset movements across the globe to really small personnel things of these teams and kind of across the gamut of how those meet. And also just all the small details we mentioned that you need to keep track of for every manager, both to understand the strategy as well as for compliance reasons. Strong writing and verbal communication skills, as we mentioned, a lot of what you'll be doing. You can be the best researcher in the world, but if you can't express your views to other people on your team or to your clients or advisors, it's pretty useless. So to be able to either write well about it or speak well about it, a lot of people are usually better at one or the other, but hopefully if you're pretty good at one, you can do work to get better at the other. Ability to build rapport quickly. So this goes into all the meetings that you're taking. You'll probably be in 100 plus meetings per year with portfolio managers, analysts, whoever. And the quicker that you can put them at ease and make them feel friendly toward you and like you, the more they're going to be open and share and be transparent and be better communicators about what they're up to. So that can be really key for having good meetings. And then organization and attention to detail. Mentioned that a bunch of times. If you're not good at it, you'll probably want to get good at it. And then prioritization and time management, mentioned that before as well. Being able to say no, knowing what is important or what is most important versus what is just good. So you really have to be pretty serious about cutting off anything that isn't kind of your most important things that you need to get done for your role.
Say one thing kind of critical here also, you're going to be held out to be the expert on the investment side, whether it's a more focused situation like Rebecca has or a more generalist type of situation like I have. But your clients are going to, advisors are going to be looking to you as the expert. So again, great opportunities there through your education as well as through potentially CFA program to get the skills necessary here to be an expert. I already mentioned some of these. Rebecca and I already talked about qualitative and quantitative analysis, key to the job. Negotiation skills, depending on your role, can be important there. Personnel supervision, as your career progresses, you get those opportunities, and it's an opportunity for job growth too. And then I think a key one here, high ethical standards. It's an industry that's gotten a lot of attention over the last several years. Madoff and some other fun names out there. High focus on ethics. So I know the number of forms I sign off on each year dealing with agreeing to be ethical and so forth. There's a lot of attention here. I'd say overall, though, if I had to summarize two key skills, I think, at least for our role, you have to have that analytical side to do the research. Also the communication skills. You have to be able to talk to people in a way that's more in layman's terms. You don't want to come at them with a bunch of investment lingo that they don't hear everything.
Yeah, I completely agree. I think that's key is, if you think of an analyst type person, a lot of times you might think more introverted, not as good at communication. We do have a lot of introverts, that's absolutely true, but you do have to be able to maintain those open lines of communication with your teammates and really have kind of the more communication side and the analytical side. I think that's absolutely true. Questions?
You said like every morning you spend about half an hour reading, and one of the sources you mentioned was white papers, and I'm just wondering what's your source for those white papers?
Yeah, so those are typically going to be sent out by asset manager companies, at least a lot of the ones I'm reading. So, if there's something going on in the market, they're doing a lot of thought leadership as well. They want to let you know what their view is, what their take is on what's going on in the market and how it makes the most sense to manage around that. So that's the majority of where mine come from. There are other places, looking at different Fed websites and those sort of things would be a good place for research. But the white papers specifically often do come from asset managers.
So that's what I was going to say.
So if 100 asset managers are sending out white papers for the quarter, what 3 aren't getting deleted from your inbox?
Do you want to
Good question. Over time you get more comfortable with some sources as compared to others, and really good question. It's tough to discern what's good and what's not. Generally, I will go with some of our biggest partners out there in terms of the relationships to look at their information, but generally the ones where information from fund companies where we don't have them on our platform, I'm less likely to use.
Yeah, I would say certainly I keep an eye out for some of the funds that I actually follow. We're putting stuff out, but honestly there are some where maybe I really like their strategy, but the information they're putting out isn't that interesting. So I think it just comes down to the more you read a bunch of content, the more you understand who has a better understanding of different areas, who tends to have maybe more contrarian ideas. If everyone's saying one thing and one person's saying something else, I'll read that one as well to make sure I'm kind of getting both sides. So just figuring out who has specialties and maybe they're better at macro or maybe they're better at bank loans. And that's just over time reading a bunch of stuff and then seeing patterns about who does certain things better than others.
Yeah, there may be things where, depending on how closely you all follow markets, market volatility picked up this last few weeks. You may have been paying attention to that, where every fund company out there came out with their own volatility piece on that. And generally, another factor for me is first come, first served. Whoever sends me their information first is generally what I'll read, and then probably not won't pay much attention to it after that.
Or do a lot of skimming after that to make sure if they have 3 points and you've already read about those 3 points, well, I'm not going to read that again. So.
How do you guys balance between picking a younger manager versus someone with a track record? Because sometimes by the time you realize that they're a really good manager, they already closed their fund or its assets have ballooned to the size where it kind of hurts performance.
For fixed income, I'd say that's much less of an issue. Funds in that area tend to be a lot larger, so they don't close until just really crazy high levels. Certainly, they might still be open, and I don't think they should be, so there's that. But I think that's something you tend to run into more with small cap or mid cap equity or certain private vehicles. So I can't talk too much to that because I typically have quite a bit to go on, just because it isn't as much of an issue in fixed income.
Yeah, we see more changes on, I would agree, on the equity side, where our firm requires a 3-year track record. So minimum you have to have 3 years of some type of performance results to show us. We do get situations where once we've hired a product, they'll make a portfolio management change. We will tend to monitor the strategy once it's in our lineup rather than just terminate it, unless there's something really concerning with the portfolio manager. But generally 3 years minimum.
Yeah. And ours in general too is 3 years minimum as well. Sometimes they can be waived if they were managing a substantially similar strategy elsewhere and maybe it was a lift out or something. That can cut it down a little bit, but largely it's going to be the 3-year track record as well for us.
How much of your job goes into coaching clients on avoiding chasing performance?
You guys are asking some good questions. Gosh, I can talk about this stuff all day. I would say it does come up in these meetings, and even with executive level, you can't assume that they know everything. I've had some comments. One trustee on a retirement plan I work on, claimed that 100% of the time you can't beat an index as a manager. But, well, that's not true, but I'm not going to get our company fired by telling you that. So you just kind of, pick your battles, I guess. But You know, I would say, and I brought that up, the example of just, you got to kind of use your judgment there in different situations.
So yeah, sometimes you'll hear really crazy things from, I had one person tell me he wanted to be in the top decile of performance every quarter forever. I'm like, if we gave you that, you should call the SEC because there's a problem. So definitely spend some time doing that. Something I like to do is point out the importance of rolling performance data versus endpoint. So they'll be looking at something, they're like, oh, this is doing terrible. I can put together some graphs that show them that actually 90% of the time, this fund is in, let's say, the top quartile. So today looks bad, but overall, this has been a really good manager. So it's more kind of reframing their expectations and making sure they understand how quickly endpoint performance can change. So yeah, I think it's a delicate thing because you don't want to be insulting and trying to teach them something that, you know, so yeah, you have to be careful, but that's really important.
I would say more often than not, they are looking to us as the experts, and you have to deliver the hard news sometimes. In the case of performance chasing, I had a situation last summer with a CFO from an organization, a Colorado-based company, where she had talked with two other high-level people within their company, wanted a high-yield fund. And I said, well, okay, just beware that high-yield riskier assets have been in favor. And we're seeing nice high returns on high income right now compared to what we've seen historically. Just be aware, again, getting back to the performance chasing argument, and I said, you know, again, we can't give advice or recommendations, but I said part of your job is you need to make sure your participants don't hurt themselves too with the investment options you selected. Didn't go over that well with that individual. The CEO loved it, but the CFO was kind of hot about that, saying that's not our job to worry about what our participants invest in. Well, yeah, it kind of is, but you try to be as helpful, I guess, as you can.
Go ahead.
How often would you fire a manager for surprising to the upside?
For me, it's not like a right away fire. What I would do is look through some of the stuff they've put out to get an initial benchmark review of if I can figure out why that might have been. But after that, it would be a follow-up call with the fund portfolio manager, typically for them to explain themselves. If after that explanation, I feel like they've changed something in their process from what they told us they were going to do, then I would absolutely fire, and I have done that. For funds who, by doing that, indicate that they're no longer being consistent with their process. Because I think what's important to understand is no single philosophy is going to always succeed, but if you employ a single philosophy consistently, you can get maybe 60% of what you're trying to get, and that is going to be a win. But if you're changing it from day to day, you're almost definitely going to, underperform.
Another good question. I got to get your business card before we leave. I would say that generally, as Rebecca was kind of mentioning, she's looking more for process changes. There's some type of issue other than the actual performance, which is what we would look for. I do get concerned when I see that because I know the flip side of that's going to come at some point. We had an international growth strategy outperformance index by, I want to say 25-30% last year. But okay, that's great, but it's also concerning. So we didn't have any specific violations of what their policies were, whatnot. But I would say, to answer your question directly, we haven't traditionally fired anything based on performance, on the upside, even on the downside. There's usually something that accompanies it that we use as rationale for terminations.
How has technology changed the way you do your job, and is there anything with AI becoming more popular that you worry about or you're excited for?
Another great question. It's something our firm is looking into more and more, and even from an investment standpoint. There's a lot of funds out there that are investing more in artificial intelligence. I wouldn't say, and you hear about robo-advisors and that kind of thing. To me, it's somewhat concerning that when are they going to come up with something smart enough to replace me, but probably not that far off. But I would say it hasn't had a huge impact yet, but I think it's a big topic out there, and it's only going to become more prevalent.
Yeah, and I think for, specifically to AI, or if they want to call it machine learning or whatever, it's really in a pretty nascent stage where it comes to applying to financial processes. So most firms I speak with, and even my own firm even, they'll have a group where they're focusing on, just this kind of crazy smart group of computer people coming together, but they don't know a lot of times how to actually apply it. And that's exactly what I'm seeing with a lot of my managers, is they're like, well, I have a meeting with this team next week. We're going to see if they can help us. So I'm seeing that it's coming down the road, but they don't even know what it's going to look like yet.
I'll take the last one. I don't know how many opportunities you guys have for elective classes at this point in your education, but are there specific classes, courses, things like that you found, besides negotiation, besides communication, that they should be looking at?
I would say if you haven't taken a logic course, that would be huge. With these kind of discussions, you often have multiple people around the table, and you can get kind of caught up in a number of logical fallacies. The quicker you can, and even when you're talking to managers, the quicker you can kind of track what that looks like and not fall into it yourself. I think that's really key for the analytical piece on this.
Yeah, I would say that was good. I thought of that one. Statistics, a big part of what we do. Anything investment related as far as asset classes or risk management would be good. Higher level writing classes aren't going to hurt you. I would even go as far as I showed earlier, my undergraduate degrees in psychology. And part of that, I at the time thought I was going to use that for law school, but a big part of that was understanding people, motivations, that kind of thing, which will help you in this business also. Understanding motivations for why a portfolio manager may be presenting something a certain way, but there may be some technical classes you could use also, but
Yeah, I would definitely second that. I think, if you are programming or even just VBA to be kind of your team's Excel guru, that can give you a little bit of a niche, and certainly something I think more and more teams, it's a plus if you can bring that to a team. What's that? I don't know that one. That one hasn't come up. That might be, yeah.
Help me thank these folks for doing this. Awesome job. Thank you very much. You guys, I don't know how you found out about today's session, but continue to look for stuff happening at CFA Minnesota. We've actually got a negotiation workshop events coming up in the next few weeks. You do not have to have your charter to belong to the society or come to our events. So please keep coming. You are the future of the organization. Someday Kate's going to roll off the board and we're going to need somebody to replace her. So please come back early and often, and thank you for coming today. Thank you guys.
thank you.
All right.